Hello. Today is June 14th, 2025, and this is my weekly market review. I'm reviewing the NASDAQ. I'm reviewing the Russell 2000. That's IWM on a quarterly chart, monthly chart, weekly chart, and a daily chart. This is all for educational purposes only, no trade recommendation because as we all know, trading is risky. You can lose money at trading. So please check with your financial advisor. Please check with your significant other and make sure trading is something that is suitable for you. All right, let me kind of do this on that chart. I see. Let me maximize this chart, the quarterly chart, resize it, and let's take a look and see what we got here. All right, on the Russell is still below pivot. The Russell is still green, but it's trading in a little zone area where I think it's having a tough time. It needs to break out of that zone or break below that zone and see what's going to happen. But we are green and we are still below pivot on the quarterly pivots and all. Let's go down to the monthly chart and see what we see here on the Russell. The Russell is one of these ones that's still below the 9-10 moving average. When I say the 9-10 moving average, I'm talking about this blue line right here. That's what this is. When you're above the 9-10 moving average, technically you're in a bull market. Below the 9-10 moving average, some of us believe technically we are in a bear market. And at this time, us being below, the 9-10 moving average on this monthly chart, we are technically still in a bear market. This thing is having a hard time trying to reverse, but it is reversing. We have a confirmation candle, this candle here of this morning star pattern, 3 candle pattern here. And we just need to get back in that bull territory. So just be mindful of your trading plans and your trading strategies and trade accordingly. Let's go ahead and go down to this weekly chart and see what we see there. Well, I thought I clicked on that. On this weekly chart, zoom in, and we can see here on the weekly chart we're a long ways. Say a long ways. That's like $30-some probably away from my all-time highs, and we're still. Let's zoom in here a little bit here, where you can see what I'm seeing. This is the 50 moving average. Us being below the 50 moving average still. I don't know why I'm clicking on stuff and it's not coming up. Below the 50 moving average, this green line right here. That's an area where, you still, as we would say at Right Side Trading, you're still in a bad neighborhood. You haven't got to a point where, okay, everything looks good and everything is ready to go. Being below that here on this weekly chart and all, based on your trading plan, your trading strategies, you may or may not be ready to go. But we've been in a pretty strong uptrend. So again, it's all based on how you want to look at things, based on what you've seen happen in the market already. You may already be long. And the thing is now, as long as everything is still looking bullish in your opinion, you're okay, even though it may not have crossed some technical, indicators. That's why I don't like using too many. I don't show too many indicators, and plus I don't like showing stuff that other people are using. As long as you're seeing some of the basic stuff, you're okay. Because here on these past couple of weeks here, from last week to this week, we still have made higher lows and higher highs, even though now we have a red candle for the week. So again, that might give you some pause but maybe not enough to actually stop you from doing whatever you may be doing. Well, let's go ahead and go down to the daily chart. So everything's still on this weekly chart. We're just below the 50, we've got a red candle. These are monthly pivots. We are above pivot. We again, just like on all the other indexes that I've looked at so far, we came above an R1 and came back down below the R1, So that's what's really kind of concerning to me. We couldn't close above R1 on the past indexes so far. So let's go ahead and go down to the daily chart and see what we see there on this daily chart, and you can see what happened here. And the Russell is kind of like in a the Russell is lagging the SPY and the Qs quite a bit. So it's nowhere near its all-time highs or anything like that. It's fighting to just get above, the 10 moving average. So it's a whole different ball game actually looking at it. And then looking what had happened this week. The Russell was still, come last week Russell was one of the things I was saying, okay, based on what I was seeing, it was okay to play it to the upside, because again, it had looked like it was ready to turn around, and then here for the couple of days here, it gapped up, then it gave me a doji, then it gave me a bearish looking pattern here, these 2 candles here, So then that bearish looking pattern again, you're out, you put your stop in, but as you can see how the market gapped down here on this day and it continued gapping down, after seeing this bearish pattern up here at the top. So that's one of the things, the whole candle pattern, this whole review thing here, but the thing that you got to be seeing this during the week while it's happening, and then based on your trading plans and your trading strategies, trade accordingly. Put in your stops, get out of your trades, do what you need to do based on your plan, because the market does give you signs, and it's just based on you to take the correct action when you see the signs, and trade accordingly. But that's pretty much it. I hope you guys had a great week. Hope you guys having a great weekend, and I'll speak with you guys next week. Have a good one. Bye.